quick sound check and we'll get underway. Welcome everybody. Got a smaller group tonight. We might see a few more join us later on, but welcome and thank you for joining us. We're going to be doing a little bit of a review tonight, a bit of a review on the cycle trader. So for those of you who are not familiar with the cycle trader, I think you're going to enjoy this session because it's going to give you a look at I'm going to give you a little bit of background in relation to the cycle trader. I'm going to explain kind of the concept behind the cycle trader and why it fits in with the systems that we trade, and why it's critical that when you're trading when you're actually running your portfolio account, that you should really consider having the cycle trader running as part of your strategy, because it allows you to capitalize when the market is potentially in rangy type conditions, which we know from our experience that is more than 20% of the time. It's 20% of the time that the market's typically trending, and the other 80% of the time it's not. So that cyclical type activity is an opportunity for us to be making money. So let's basically have a look at the cycle trader. We're going to break it down today. So Giovanni's been good enough to send me through some workspaces here, which I'm going to talk to you about. Some of the futures workspaces. We'll do a little bit of a recap on the Forex, and I'm just waiting for the US dollar Swiss to load up here, so that should happen fairly soon. And I'll just show you what we ended up with from Monday night. Now, Monday's presentation has been recorded. It'll go up tonight. It's been rendered, so it won't be too long before that's up on the website. This one, hopefully, I'll get up tonight because I'm away for a couple of days, so I want to make sure that we get this session up as well. So, the cycle trader. So what I'll do is I'll just show you. I'll show you a couple of charts here that really do a good job of explaining. Now, when I'm looking at and we'll bring this chart up here on. We'll bring up the Russell. So what we're looking for, and we'll just widen this up a little bit. Now, the idea behind the cycle trader is that when we first looked at developing up the V2 strategy, we wanted to put together a system that was able to capture the different phases of the market. So the idea was obviously that we would need something that we could get into a potential trend trade or a breakout strategy, so hence the breakout and the trend systems. But also too, we knew that particularly on the currency markets, that there was a great opportunity when a market broke out, for once that initial move was over, or once that initial move had taken place, you tended to get a period of consolidation. So what we were looking for was basically putting the phases of the market together. So we would say, right, well, we're in a trending market. If we break out of this dynamic support resistance, not all the time, obviously, because you're always, no matter what system you use, no matter what methodology you use to get in the market, you're never going to be right and perfect 100% of the time. We know that. Even if you use a moving average, a double moving average crossover, or whatever strategy you use for a trend type entry, there are times when you're just going to get false breakouts. So with the dynamic support resistance, that is another mechanism for us to time ourselves into the market for a potential trend. So the dynamic support resistance are designed to capture exactly that dynamic support resistance based on the algorithm. And once you get a break of that dynamic, say, resistance as we've got here, we're looking to go long. We know that the cyan bricks are our long entry, and we've got the Renko charts up because we like the Renko. That cleans up price action. It gives us a very good look at exactly what's happening with price. Now, So what we typically see what I typically saw when I was doing my kind of system development up on the V2 was that you would invariably get a good run up once you got a confirmed breakout trade that that travelled a reasonable distance and got into a reasonable trend, even if it was just an intraday trend. You would typically get a reasonably good move, but what would follow would be that consolidation. So the components to this strategy were, right, well, if we do get the trend move up from our breakout, the next phase in the market will typically be either a pullback or some type of pullback strategy on the way up, so we can position size into the trade, and this is where our pullback strategy comes into play. But also you've got a situation where you get the counter trend type play, where you get that that divergence from like bullish divergence, bearish divergence, and there's an opportunity there to capitalize on the counter trend play. But there's also situations where you'll get a move up and then you'll get a period of consolidation. And what I found was that basically this support resistance did a really good job of when price consolidated, capturing that price movement within the support resistance bands or within the support resistance bars. So I would typically see in my testing this support resistance and regularly just price either stay within this area or just only slightly break out of this area. So if we have the opportunity to say, right, well, here's the trending phase of the market. So there's our trending phase, and obviously we're only on a small time frame. Then we have an opportunity for potentially a counter trend play, which we've got here. But we also, at some point, are going to get the consolidation phase, so that cyclical type activity, and obviously that can get wider as well. Like you've got that really tight cyclical activity where not really a lot of points are going to be made either way, and then you can get bigger moves or bigger as the market starts to potentially move out of that range. The ranges may not be breaking out, but may be getting slightly bigger, as you can see here. So the ranges are starting to move and get bigger. They're not breaking out, but you can see that support resistance is getting captured nicely. So again, we can see that that cycle type activity is occurring. And what I found in my testing was that, right, well, this usually lasts for a reasonable period of time, or it will usually be a phase of the market once you've had that big move, particularly on the currencies. But then typically at some point there's going to be another breakout. So as you can see, so we go to a very tight phase area, and then we start to open this phase up a little bit. But if we look at the cyclical type activity, we have never really from losing our trend trade, obviously, that the trend, and we go into this green and red brick type activity, this cyclical type activity, we then don't lose the cycle activity till about here. So you've got a good period here of a couple of days where you've got nice tight rangy type strategy, and particularly here where there's an opportunity to make some good money. So using this concept of dynamic support resistance, it was glaringly obvious to me on the currencies that, and this is obviously the Russell, so I am referring to the currencies, but we're looking at the Russell chart, that when we go to the currencies, you'll see it in kind of more of a pictorial look. You'll see it happen more frequently and bigger ranges, and it just sets up beautifully. But you can see it also happens on the futures market too. So what is ideal for us as traders is to be able to not just have one strategy, but have multiple strategies to be able to go into the market with. And the advantage, obviously, with the Forex is that we can trade multiple strategies and still maintain the same risk profile. On the futures, it needs to be a little bit more thought out in relation to your portfolio management and your risk management, because if you're going to trade a smaller account with a multi-system strategy, you really need to have something that is managing your risk exceptionally well as far as your drawdown. So what we came up with, or what I came up with, was the cycle trading strategy, which is what we're going to talk about tonight. So the concept behind the cycle trading strategy is that we are basically buying support and selling resistance. Now, it's as simple as that. We're looking to buy support, sell resistance, but we're only looking to do it when the market phase has stopped. So it's a little bit intuitive in that, right, well, if the market is trending, so we're in our cyan type price action, we're in trending conditions, and we're not going to take a cycle type trade until we get a second phase of until we've lost the trend and we see that second support or resistance setup. So what do I mean by that? So if I just get rid of this eclipse, because that's a little bit off-putting there, I've got the trend here, still got that trend, that sign. I lose the trend because I go back to my red and green brick, so that means that I've actually lost the trend there, and you can see clearly we haven't got that trend movement. So as soon as we get that second level of resistance or support print, then we're looking for a potential trade. So anytime now there are different ways you can. I've measured this up, basically looking at, right, well, I don't want to always have the cycle trader on, do I? Because if I'm in a trending market and the cycle trader's on, it's just going to be taking loser after loser after loser. It's like trying to trade an oscillator based on overbought or oversold conditions, and you're waiting for the market to reverse on a counter trend strategy, and you're just taking loser after loser after loser, because we know that in a strong trending market, those things just don't work. So you've got to be careful about having you've got to build in some type of intuitive measure into your system to allow you to only be in the market when the conditions are right. Not always going to be perfect, obviously, but the idea is that you want to be in when the conditions are potentially ideal, or at least in your favour, so the probabilities are in your favour. So once we lose that trend, we're looking for the second print of support without any trend with it. So when we looked at the strategy, and I'm going to go straight into the strategy here, what I did was I got Mike too, and we'll have a look in here. So for those of you who are unfamiliar with the system or strategy, if you're new to the Pro Trader group and you haven't really had a good look at the systems yet, what I'm going to do is I'm going to basically just take it back a little bit. On this chart, we've obviously got our primary, very simple indicators. We've got dynamic support resistance. We've got our TP trailing stop, which is our take profit stop. And really, that's all we've got on the chart. And we've got our paint bar. So if I right click on the chart and I go to Format Analysis Technique, we only really have the three key indicators on there. Because remember that we want to keep it as simple as possible. The more complex you create your strategy, the more variables, the easier it is to break it, or the harder it is to get it, to get it working really well. And the more moving parts you've got to these things, the more things that can go wrong. So if you keep your systems nice and simple, particularly if you're trying to, train and build a robust strategy, you want to keep it fairly simple, because really at the end of the day, as long as we're getting into the market at the right time, or at least with the probabilities in our favour, then what we're going to use is the lessons we learn in money management to increase our portfolio size. As long as we've got an edge in the systems we're trading, and we're trading multiple strategies, then we're in a very, very good position. So this is basically our analysis technique. These are our indicators, and then you've got our strategy. So what's the difference between the indicators and the strategy? Well, the indicators are for the purpose of learning the system, showing us what's happening on the chart. So they're our visual cue. The strategy is more for the purpose of, that's really it's like the engine under the hood. So that's going to deliver or execute the trades based on what our methodology or our mandate is. So our cycle trader mandate or methodology is that we're going to take trades based on support resistance, and we're going to buy support, sell resistance. We're not going to, it's not a mean reversion strategy. So for those of you who are Forex traders and thinking, oh, this sounds like a bit of a mean reversion, well, it's nothing like that, because we're not, if the market, there's a fixed stop, so basically that's it. If you run either whatever the stop is that you decide to test up, that is your stop. Each strategy we have has a fixed stop, and there's no mechanism for pyramiding into a losing trade, so we don't increase our lot sizes if the market's going against us. So when we go into this cycle trader strategy, if we click on this tab here, we're actually going into the actual strategy itself. So this is the nuts and bolts of the strategy. So what you're doing here is you're basically now going just back a step for a second. What you've done is you've done all the work in your market profile exercise. Why did you do all the work in your market profile exercise? Can anybody, again, tonight's a little bit of give and take, so I'm going to ask a few questions out there, and I'm expecting some really good answers, like we had on Monday. Some great participation on Monday. That was excellent, and it makes it a bit more interesting for me as well, because I can. It's always better when I'm kind of getting some really good feedback, build confidence in the system. Exactly. What else is there? Good understanding of the market. That's it. So we're doing our testing in our market profile to build confidence in the system, to get a really good idea, a very good idea of what our system and our market can do. Because what is the point in turning this system on, the cycle trader? What's the point in turning this on during, say for example, the 8:30 a.m. session in the US? Let's assume that you're trading the Russell. You've got no idea about that market whatsoever. In fact, you're very new to trading, and you decide, right, well, I'm going to buy this system, this cycle trader system, and I'm going to do a little bit of testing, and the little bit of testing I did looked pretty good. I'm going to run this pretty much 24 hours a day. What do you think happens? Like, the worst time you could be running this system in the US session, what would be the worst time you could have this system on in the US session? When is it the most volatile time of the day in the US? I know we've got some US traders in here, and we've got obviously people who have been trading the US session for a while, so you guys would know exactly when that hot spot is in the US session. Yeah, news 8:30. So you definitely do not want to have this thing running at 8:30. You'd be sitting there pulling your hair out, and that's something we don't want to be doing. So basically, having that idea about what's going on with your market, it just helps you to frame up where you should be putting your system. So it then allows us also to not waste time testing in appropriate time frames. We can really start narrowing down some good times of the day to be turning this system on. So on the cycle trader, Giovanni's got this from he's selected a time here. Now the other thing too is that when you're doing your testing, you may find that that there are certain times based on the brick size where you can actually have if your cycle trader's got a big enough brick size, you can actually have your system running more for more hours of the day. For example, I was trading about a year and a half ago the DAX on a 987 tick. Now 987 tick is a huge tick chart. That's a big setting system. I had a 25-point stop on the DAX, and that thing was running pretty much the whole day. So, and it was working beautifully. I mean, it didn't work as well when the volatility picked up, but during normal volatility periods and low volatility, it worked a treat because it was a big enough tick chart or a big enough Renko brick size. So if you've got this, you've got to also think of, right, well, what am I trying to accomplish? Do I want to trade if I turn this to a really tight brick size, say like this is on a 1, but if I had say a 0.2 or a 0.5 or something really small, and I was running this during a volatile period, that would be just a recipe for disaster. So you've got to you've got to know your market, you know your market profile, know your brick size or the size of your trades that you're working with as far as your strategy, and then have the appropriate stop as well. So let's go through some of the dynamics of this system. So we've got our start and end date. So we've got our start time, end time. We have two categories here, so we can run two different time slots. We've got the second part of this is our entry. Now, we can either use our original entry, which now I'll explain the original entry. The original entry was, right, well, what I basically did was when I first developed this system up, I thought, right, well, what I want to do is I actually want to take trades based on an offset. So I want to either get into the trade if it breaks this area by +5 or -5. So if it's +5, obviously it won't break the resistance, but if it's -5, then it'll be above. So if this price breaks it, then I'm taking the trade, because it's cyclical activity, and you do get breaks, as you can see here. So my initial idea of the cycle trader was to have the ability to take the trade on either side of the support resistance based on the market knowledge that I've collected. And I looked at the DAX and I saw that if the DAX wasn't trending, it would generally break these support resistance levels by about between, say, 5 to 8 points, and that would be it. So if it broke by more than about 8 points, it would go. But a lot of the time on the DAX, when I was looking at the DAX, and I'll go to the DAX market, when I was looking at the DAX, I would see that, now I had it on an 89 tick chart, so obviously we've got it on a Renko, so it's not quite exactly the same, but it'll give you a visual cue of what I was kind of seeing when I was doing the testing. I could see that with my back testing, and the only reason why I kind of worked this out was because I spent hours and hours and hours testing this thing up, and I found that the DAX was really good, a really good market for not really, if as I said, if it didn't go for more than 8 points, it usually didn't go. So it would just break and then come back. So what I decided, right, well, if I'm going to create this cycle trading strategy with Mike, I want to get Mike to allow me to have an entry where I have an offset. So that's my offset. So my support resistance. So I'm going to say, right, well, I'm going to use the true entry, which is the original entry. I'm going to use my original offset. So if it's a 0, it's right on the resistance. If it's -5, it's basically 5 pips above. If it's -10, it's 10 pips above. So I'm not going to get into that trade unless I go 10 pips above, and then I'll get triggered in. If price touches the resistance, then basically I'll get triggered in if I set it to 0. If I have it as -5, then it doesn't have to touch, it just needs to go within 5 points and I'm in. So the other reason why I really like this concept or strategy was that I'm trading against the flow of the market. So a lot of the time when I was getting, sometimes I was getting slippage on the breakout strategies or the trend trader on the DAX. I was actually getting some pretty good fills on this system because I was getting better fills on the cycle trader. So this was my initial idea basically, and so before we added this number 1, number 2 entry, so no trend first, no trend second, the cycle trader was basically just these 4 time slots and the original entry and the support resistance offset. That was it. So then we basically said, right, well, okay, let's close that down. What we found was that when we started looking at the Renko charts, we found that particularly on the currencies, and I'll just switch over to the currencies here for a second, you'll see a really good example of it. What we found with the currencies is that when I started testing the currencies up, I found that the currencies a lot of the time didn't even touch the support resistance. And I'll try to get an example of it here, something that shows a bit better. You would get periods where there would be huge consolidation, and this is a bit, sorry for this being so slow, you'll get periods of dramatic, I'll go back to that because that's way too slow. You get periods of consolidation, but your actual chart, it wouldn't actually touch the, see here, it wouldn't touch the resistance or the support. It would just kind of trade above it or below it. So, and this is a prime example here. You've got doesn't touch. And what I was seeing, I was going, well, I've got this thing set for a -5 offset, so I wanted to break through a little bit and then get me in. But it wasn't touching. It was just beautifully kind of trading in between and doing a fantastic job, obviously, on the Renko. So then I went back to Mike and I said, all right, well, Mike, what we need to do is we need to change this strategy because this thing is not working as it should do. Because I wanted to get into all these trades. So what we said was, right, well, let's turn this to false. So we don't want the original entry. So if you decide that, well, you want to go back to the original entry, you can do that. If you match up the trend and the, like I did initially with the DAX, the trend and the cycle, and you want to make sure that, you know, if you find when you're doing your analysis on a market that if a market or a price breaks by a certain point, it'll go, but if it doesn't, it typically, you know, retraces back, then you can customize the strategy accordingly. But what you can also do is you can say, right, well, I'll just do a false here. I'll use the Renko, so that's not going to count for any support resistance. It's just going to take, as soon as I lose the trend, it's going to take the first entry. That's it. So basically, as soon as the trend's lost, now we know what's the trend, what tells us the trend is on for the V2. So everybody should know this one. The V2 trend is shown by, obviously, there's a, so we know what the trend is. Yeah, the white bricks or the cyan bricks tell us the trend is on. So if we lose the trend, so if it says, all right, well, if there's no trend, I'm going to take the first entry. So what it's saying is that, all right, well, if there's no trend, this thing's going to take the first entry if it's turned on. So just back here, all right, so we've got the trade running, we've lost the trend. So here we lose the trend. So obviously this thing's set to a certain time, but that's basically going to take the first entry there. That would be the first short. Now, the other option is, if we have this turned on and we basically have the trend in play, then we can also say, right, well, I'm really not keen to go in on the first, on losing the trend first, because sometimes I get burned a little bit by doing that. I get in too early, or, you know, it's a little bit of a pullback and then it goes again, and I've seen that a few times. So I want to test up and I want to make sure that I'm actually in a trade that has consolidation. So I'm going to go in on the second cycle, or the second. So basically, by using that format strategy, you can go in and say, right, well, I don't really want to go in on the first one. I want to make it the second one. So you just change that to false. Anytime you want to change one of the, you know, components of the strategy, you just turn it to false and then engage that by turning it to true, and bang, you're on. So you're on for the trend. So now you're taking the trend on the second entry. So we'll go back and then obviously, once we've established how we're getting into the market, then it's just a case of the initial stop. So you can set your initial stop to whatever value you want. But again, if you're trading Renko bricks, obviously if you're doing tick charts, it doesn't matter what you put in there. Well, you need a big enough stop to get into the trade and for it to be profitable and providing an edge. But if you are trading Renko, you have to have a multiple initial stop of the brick size. So what do I mean by that again? If you've got a 5 brick Renko, you've got to have a 20 pip stop, 20 point stop, or, you know, a 15 point stop or a 10 point stop. Now, the other thing we've got here is we've got a TP trail stop. So you've got your TP trail stop, we've got that set at true, and we've actually got our TP. So this is exactly the same as we would normally have. When we get into the trade, our stop is the initial stop. As soon as this TP trail, which we'll go back here and have a look at, say for example we're in here, where we've got an initial stop of 20. We get triggered in there. That's our setup. So 70, 74.35. So 74.55 will be our stop. So 55. So sorry, 45 because it's 10. Remember we've got to halve it because it's the DAX. So we'll go to 45. Now, what's going to happen here is that basically, once we get into this trade, as soon as if we've got that TP turned on, so if we've got this TP here turned on, then as soon as we get a movement that is better than our current stop, this thing will start to move. So if our stop is, say, a 5 brick offset or a 5 point offset, 1 brick offset, it'll start to move down and it'll lock in that profit. Now, if you go back to the strategy, and if we go in here, so if we've got a trail, we've got that set at true and it's 0, then it'll be right on the red dot. So you've got to, if you set it at 0, it's right on the dot. If you set it at -5, so if I set that to -5, my stop will basically be working above the market. So it'll be working 5 points just above that red dot there. Everybody can see that pretty clearly, that red little moving dot. If I have it as just a positive 5 value, then basically it'll be this side of the dot. So you'll have a much tighter stop. So really that depends on how aggressive you want to be with your risk management and your stop strategy. So we'll go back in here. Now, getting back into the strategy itself, you've got, so you can use that stop, you can use support resistance. So obviously if we're going to use support resistance as our stop, we're going to turn this to true. And we're going to say, right, well, I'm going to use support resistance. So if I'm in a short position, which we are at the moment, where do you think our stop's going to be on this short position? Where our stop is going to be, once we get into this trade, we've got an initial stop of 10 points. If we've got say I decided to set that to -5, I want a support resistance stop of, well, this is support resistance. These are our support resistance. There. Now, if I don't have a take profit value on the cycle trader, now this is the thing here. If you don't have a fixed target or a take profit value, what this system is going to do is it's going to incrementally move down your stop based on resistance. So you could effectively turn this system into something that's not quite the cycle trader, because really the way we've designed this up on the Renko more so, and obviously the other charts, is that we really want to sell support, sell resistance, buy support. So ideally we want to be taking profit here because that's the nature of the system. It's a cyclical type system. However, you could effectively modify this so you don't have a fixed target, and I'm going to show you where the targets are in a minute. So you could take the trade on entry, and then your stop will be working on resistance. So you would get into the trade here, your stop would move to there, then your stop would move down here to 5 points above, then you would move again down to here 5 points above, and eventually you would get knocked out there. So that's what would happen if you didn't have a fixed target. So if we go back into the strategy, you're probably thinking to yourself, well, that's weird because it's a cycle trading. So what you've done is you've said, right, well, I'm going to get in on my first entry or second entry, say. I'm going to have an initial stop. I'm turning this to false. I'm not going to have a fixed target. I'm going to run a support resistance trailing stop. And I'm not going to have a target at all. So I've got target as false. So I don't have a fixed target. I'll turn that to false. And I'm not going to mark it out on the opposing resistance. So I'll turn that to false. So what effectively happens then is that we're taking every single time the trend finishes and we get that second support or resistance set up, we're basically just going to be taking the trade until we get knocked out on support resistance. So you can see how, even though this is a cycle trading strategy, if you look at the actual system itself, you can manipulate the system to do what you really want as far as trailing your stop and getting into the market. So if you find that you're testing up a market and you go, look, what I'm seeing is that when the initial trend goes, then it gets into a bit of consolidation, maybe a couple of, you get a little bit of consolidation. But what I'm also seeing is that it generally breaks out after a couple of support resistance bars. It'll break out again. So you could use that information to your advantage and say, right, well, if that happens frequently, then you could put that into your strategy and test on that. So there is a way to use this system in a different way. So let's go back to the original way it was meant to be used. But does everybody see how that kind of can play out? And really, you can do that with any of the stops. So if we put in here the support resistance, we can also do that with the TP. I mean, obviously the TP stop is much tighter, so you're going to get knocked out a lot quicker. We can also do it with the pivot high, pivot low. Now, so I've explained to you at the moment the 2 of the 3 stops we have, which is interesting. So we've got the TP, we've got the support resistance, and we're looking at basically resistance at the moment. But we also have the pivot high, pivot low. And the pivot high, pivot low is interesting because at the moment, the pivot high, pivot low isn't on this chart. Okay? So what we're going to do is we're going to actually insert that now. We're going to go insert analysis technique, and we're going to put in the pivot high, pivot low. Now, it's not in your cluster of indicators, so it's not in there. It's in the show me area. And if you go down to here, you'll see pivot high, pivot low. So we'll actually highlight both of those and put those on. Now, when they initially go on, they're going to be set at a default of 3. So we want to change that because 3 is a little bit tight of a pivot, and you've got to make sure sometimes it's a little bit tricky to pick this pivot up. The easiest way to do it really is not to do what I just did. The easiest way to do it is to go into your analysis technique and just format that, and then basically go into inputs and change that to 5. I like a setting of 5. It's up to you what you test up on and choose. But I personally like a 5 because that opens the trades up a little bit more. The other thing I like to do is I like to make sure that I've got the cyan, not cyan. So I'll go, okay, I don't mind the red, but let's get the cyan changed to, we'll change that one. Got to put our inputs there to 5 and 5. Now, I'm going to show you something else, and I did a video up on this yesterday, which is up on YouTube and in the members area under the Trend Trader. But what I want to show you is I'll show you something really cool about TradeStation, and I'm not sure if everybody knows this, but I'm just going to, so my pivots are on there now. So the pivots are on there, the yellow for the swing low, swing highs in red. But if you go into any one of your indicators, so if you go to any one to insert analysis technique, if I go to my pivot high or my pivot low, I can actually grab a quick definition of that. So if I'm not really 100% sure on the indicator, say I've heard, myself or Mark or someone, Giovanni or someone mention it or talk about it or have it on the chart, or one of the other guys or Luke, whoever it is, talk about, an indicator. The best thing to do is to go in, if you're not sure about it, go straight into the definitions area and then learn about that indicator, because there's no point trading something that you know nothing about. So you want to get a little bit of an idea about what it does. You can see here that the default on this pivot is left strength 3, right strength 3. So what that's basically showing you is that, or telling you is that this particular strategy, this show me strategy, because that's what it is, it places a dot at the low price of the bar when the low price is less than the low price of the 4 previous bars, and less than that of the low price of the subsequent 2 bars. So it's basically plotting the swings in the market, and that's a 3 offset we want to use a 5. Now the reason why we want to use a 5 is because we want to use something that's got a little bit more movement, a little bit more room. Because what we're going to be doing is, if we go into our strategy, which we're going to do now, and we want to test, so we've got, as you know, we've got these 3 stops that we typically use on all our strategies. If we go into a strategy and we say, right, I'm going to right click on this, format strategies. If I go in here, I'm going to need to, if I turn the TP off, I turn support resistance off, so I said, oh, okay, I've had enough of support resistance, I'm turning that off. I want to do some testing on the swing. So I go in here and turn this to true. I basically then need to change this offset, because otherwise, if my indicator does not match my strategy, then I'm not getting the right setting. So you've got to definitely change that. Now, not many people, in my experience, use the swing trail. And I think that if you spend a little bit more time nurturing it and using it, or at least testing it, you'll find that it actually does work really well on some of the strategies. So it opens up your, but remember too that when you're looking at these stops, when you test them up, you've got to find something that suits your style, and you've got to find something that actually suits your, I guess the word is your risk appetite as well. So if I go in and, because when you do something like a swing stop, as we get here, so let's assume we've got, we'll just move this out of the way, here's our trade here, our trade entry, we're in on that trade. Now our swing low, sorry, there's our first swing high, okay, first swing high is there. Our initial stop is obviously slightly above the market. There's our first swing high. I like to use a -5 point offset, so I'll go 5 points above. There's our next swing high. Now the thing is that if you're using the TP, you're used to using the TP, you're out of the market basically down here. So you're not leaving this much room. You're the type of trader who typically wants to take profit off the table. Don't want to give the trades too much room. And that's not a bad thing. There are some strategies that need to be, need to have a tight stop. Others you might want to run for a couple of days and have a really bigger stop. It depends on what your goal, objective, your style is. And that's not a positive or negative comment. That's just, it is what it is. So it's really up to the individual. Now, but the thing is, if you're going to use the support resistance stop, you've got a lot of room there for this thing to come back and knock you out and not make a lot of profit. So if your expectation is that you want to see, if you do see a move that goes, 30, 40 points, and you feel, not fantastic if it retraces and knocks you out for +5, then obviously support resistance isn't your stop. But if you've got something that is using the pivots or the TP, you might get a stop that is more dynamic and much tighter to the market. So you can see there that if we were using the pivot, we would get knocked out here. So basically we would be out of this trade. So they're the 3 stops that we've got access to. But as I mentioned before, the whole concept of this system is not really to trail the stop. It's really to take advantage of consolidation. So for me, I would be more inclined to say, right, well, I'm going to use a fixed stop, and I really want to mark, I want to go down to the profit area of this strategy, which is here. So I'm going to turn this to false. I'm going to use just the fixed stop, and all I want to do is I want to say, all right, I want a profit target, I'm going to go true, and I basically want to get out at the opposing support or resistance. So once I get that opposing support resistance set up, which is basically this type of cyclical activity, I'm out. So if I do that, my trade looks like this. Let's have a look at what our trade looks like if we do that. So if I set that up, then basically on this initial entry that we're talking about, this cluster here, I get into the trade as we do there, because we're selling resistance, and we get out of the trade, basically get out of the trade as soon as support sets up. As soon as that bar sets up, so which will be basically here, as soon as you get that closing bar, you're out. So you get an entry from there to there, and that's it. you'll be out of the system. But then, because you're now in this kind of cyclical type movement, you'll be taking a long here, and then obviously you would have got stopped out down here. But this is what happens, and you can get periods where there is great little runs here, and let's look at them. Here's where we get a nice little short, then we get the long, then we get a corresponding short here, then we get a corresponding long there. So these are the times when things look, are starting to work really well, and this consolidation is what you're really after. So basically that's what this system is designed for: buying support, selling resistance. So you're actually taking advantage of the strategy as it's designed to be taken advantage of. So it's not always going to be obviously that pretty, but you're going to get, and you'll see examples of it here on the Swiss, which doesn't want to cooperate at all. Okay, no, that yeah, so you see examples of it there. We'll go back to I'll stick with the DAX. I'll stick with it's better the devil, So basically that's what we're dealing with. We're dealing with we can either take profit. If we go into the strategy, we right click on the strategy, we can either take profit automatically exiting out as we do. So you've got a few options here. You can say, right, well, I'm going to do a fixed target. If I get into a trade, I'm going to have a fixed target, and that could be a value. Or you can mark it out on the opposing setup, the opposing support or resistance, or you can have an offset of that setup. So if I say I'm targeting out on the opposing support resistance, then I'm basically going to take profit either above the support, below the support, or on the support. So you've got an option there, and this is where you dictate what the value of that is. So if I got into that short, which we did, and we were looking for a target that was basically just a little bit past the support level, we might say -5. Then we would go, right, well, I'm in the trade. Let's say, for example, I'm in a trade here. I want to see, I'm only going to take profit if I hit this level here. So I'd have a 0 in my target. Or if I wanted to break it, I'd put it as -5. And then that would fill me at -5. I'd have to break that level to get out. Otherwise, I'd get stopped out. So basically, you can dictate exactly how your strategy takes profit and gets in and out of the market. And so they're really the combination. So if you turn that to, as I said, if you turn that to false, then you can determine at what point the strategy is going to make or take. I'll come back to that, Sean. So then we've got obviously the other component of it. So we can then, if we find that, look, I like the idea of targets, and I like the idea of just going in the cyclical type activity, buy support, sell resistance, buy, because that's the system, that's the nature of the system, that's what we designed it for. But if I do get a period where I get a couple of false breakouts, I don't want to be left obviously with exceeding my max risk. So I'm going to have a maximum loss limit of 2 trades. So you can set that to true. You can have your wins unlimited, and the system will stop after it has 2 losses. But if you're like me and you like to have a dollar value, because one of the things you don't want to have is you don't want to have this system having 2 $20 losers and then taking a $1,000 winner. And because you set the strategy to look unlimited wins, but if it basically has a max loss of 2 trades, I'm out, and those 2 trades tally $20, that's not good. So basically we'll want to make sure that if we're going to set this, we set it to true, and you want to dictate exactly what your P&L is going to be for the day, and you can do that here. Now, again, we did a lot of this work on Monday. We decided exactly what days of the week we were going to trade, didn't we? Because we went through that whole process of breaking down the SN58, came up with some days that we were going to turn the strategy on and off, and it worked really well. So that was a good exercise to go through, because that's been a really good performer, and just a little bit of a drawdown recently based on the volatility, but we're also able to analyse that and say, right, well, there were a couple of days in that system that weren't profitable. And you can see the one that Giovanni's put up here. Don't worry, Giovanni, I'm not going to be saving these settings because I've been playing around with this for the last hour. So I'll just open this up again. But Giovanni's one here, he's got Tuesday on and Wednesday on, but the rest of the time on this DAX strategy, the market is obviously a lot more volatile, or there's a lot more trend in this period here, Thursday, Friday, Monday. So, and the other part of this strategy is you can have the volume spike, volume divergence filters. So really, with volume spike, volume divergence, that's just our indicator to tell us where there's either a divergence in, say for example, let's go through and do an example of this. Let's say for example we've got buying pressure coming in, we've got buyers coming to the market, but the market's moving up, but what we're seeing, that indicator is telling us that if we've got that indicator on it saying, right, well, what we're looking for, we're only looking to take trades when the market is rallying, but we're losing the buying momentum. So we're losing the difference between the buyers and momentum, the sellers, buying and selling volume is dropping. So even though the market is long and rallying, the buying volume is dropping dramatically, and there's an increasing number of sellers. So at some point, if that's the situation on your indicator, on your volume indicator, you're going to get a turn in the market. Now it might be after a volume spike, or it might be when you see a volume spike and you see the volume divergence. But either way, you're going to get a turn in the market. So you can use that indicator to then, or both of those indicators, to take your trades. So adding that higher probability setup. Now, that's basically a walkthrough of the cycle trader. Hopefully that was helpful tonight, guys. I just wanted to, I'm going to show you a couple of the futures markets, because we've had on the trend trader, we have definitely had a fairly, thanks Brett, we've had a fairly quiet week on the futures, but interestingly, thanks to Giovanni, he's done a lot of really good work on the cycle trader and come up with 4 really good cycle trading strategies, which I'm going to show you now. So we've got the Eurobond, and we're just going to quickly flip through these, but I'm going to upload these to the website. This one's, now remember the cycle trader, we were looking for something $50 and over. This thing is running at 56, so perfect. It's the Eurobond, so we've already got a Eurobond, 55 ticks still. On the 144 I'd be turning off because it's starting to get to that max drawdown. But if you combine a trend with the cycle, which really is our ideal situation, really good position. This thing here has been chugging along nicely. You can see the last week or two, when there hasn't been a lot of movement, this thing has been flying. Let's go to our next one, which is the crude. Crude oil again, huge. You had a period here where it was fairly flat, but this is flying along. And I think from memory from our discussion, last week pulled in a massive $3,557. And you can see the losing weeks are very small, winning weeks are huge. So this thing is trading almost for the entire session. It's a higher tick brick size, which I mentioned before, which is key. But this thing is flying along, and its actual average trade net profit is up around the $96. It's had 201 trades, so this is really running nicely. That's on the crude. Now we'll go to the Russell. The Russell's got a huge average trade net profit of about 107. You've got 8,000. So we do have a Russell. Now this thing looks really good. We have a Russell trend trading strategy. So we've got the one that Giovanni's put together on the trend. So this is a really good complement to the Russell. So if you are trading the Russell trend, you may want to think about keeping an eye on the cycle trader, and obviously we've got the DAX there. Now I'm not going to show the DAX one up because I've been mucking around with the settings on that for the last hour, so that'll be all completely out. But I won't save this one. I'll save the next one, and we'll go through that. So you've got really 4 very nice strategies there. Well done, Giovanni. Nice work. And as I mentioned before, if you are looking for, looking for these systems to obviously trade, you definitely should be. Okay, so he's got trend long only, short, cycle short only. So again, some work on the longs and shorts as well. So making sure that you'll find that if you do that additional analysis, days of the week, longs versus shorts, you may find that there's an advantage to just having one side of the market trading on the cycle or the trend, picking up those kind of cyclical type trades. So Sean just posted there, I'll just answer this question because we're just about out of time. Sean said, doesn't a swing stop in cycle phase imply it's trending rather than cycling? Absolutely. So that's what I was mentioning, if you do that, you set up the swing stop or the support resistance, you're really not trading the cycle trader, are you? You're trading kind of a hybrid of that. So also take it that you can use both fixed TS and a runner. Yeah, definitely. I mean, you can use a fixed target. So you can use a fixed target, but you could also use basically a trailing stop and capture the runaway target as well. So there's definitely advantages to playing around with these systems and just seeing what you can come up with, because as you can see from this example, the trend and the cycle trader have a completely different kind of setup facility. So you can combine the two together and still use your biases, the longs and shorts, days of the week, and combine systems and see that even though we've had a choppier week, adding the cycle in really helps to balance the profitability of that. We've seen that with the Forex market anyway. We saw that on our stats last week with the cycle and the trend as well. So guys, I was gonna wrap it up there for tonight. Thank you for your time. I'm gonna be covering the optimization next week. So we're going to be doing a session on walk forward optimization. So I thought tonight was a good, at the request for the bit more training on the cycle trader. So that was hopefully valuable. And I look forward to catching you on Monday. We're going to be going through walk forward optimization. I know everybody's going to want to see that because there's some great advantages you can get from tapping into that technology. So we're going to have a bit of fun with that. So thanks for your time, everyone. Have a super weekend. I'll be away for the next couple of days, but have a great weekend, and I'll be getting that recording up, and hopefully this one by tomorrow as well. So all the best, everyone, and we'll catch you later. Cheers.